right, good morning, everyone. Hello, welcome, bonjour, gwe etilahai. My name is Carol Spicer, and I'm pleased to welcome you to Community Connection on May 23rd, 2023. Beautiful spring day out there, and on the West Coast anyway, where I'm joining you from. Want to welcome you to this community. This is a community for folks primarily in the not-for-profit sector. However, given today's topic, I've kind of opened that up to whoever wishes to join us today. And it's really about an opportunity to share ideas and what's happening in the organizations that you represent. And I know some of you joining me here today are involved in many organizations, as well as full-time jobs. So whichever hat you choose to be wearing today, thank you for joining us. My client base is probably about 80% in the not-for-profit sector. And the more I work with not-for-profits, the more I realize you all have the same challenges, the same successes. You're probably working in a lot of cases with the same people, the same parts of your community. And so I'm really excited to be able to bring this platform. We do every 2 months, bring folks together in this sector to learn about one another, promote who you are. I've seen some great connections happening in chat as we go through the sessions. People sometimes are looking for volunteers, and then they make those connections in different parts of the province, and that can help out. So that's really, for those that aren't familiar with Community Connection, that's really what it's all about. So I'm going to first off ask you a little poll, and I'm going to open that up in something called Slido, and this is a new integration that I'm using with Teams. So let's see how this works. So you should get something popping up on your screen. What community are you joining us from today? Not sure it's going to give me the image the way I've done it here, but we can try. Okay, so I'm going to take a moment to acknowledge where I'm joining you from. I'm joining you from Pasadena, which is on the west coast of the island. And I do want to take a moment to acknowledge that it is in the unceded territory of the ancient Beothuk. I'm seeing that many of you are joining us from traditional Indigenous territories. So I ask that you join me in acknowledging with respect the diverse cultures and traditions of all the Indigenous people, especially those in our province, the Mi'kmaq, the Beothuk, the Inuit, the Innu, and the Southern Labrador Inuit. So it's not showing me the way it would have normally shown me if I'd done this a different way. So it's something that I've learned from. But we do have folks from across the province. So that's what I'm seeing here on that. So thank you so much for joining us today. So Lynn is our guest speaker today. Lynn is a professor at Grenville. Lynn and I both volunteered recently at a startup weekend and realized that our first connection was several years ago when we both worked for the provincial government. We both knew each other, looked familiar, name was familiar, and for whatever reason, we had never made that connection until recently again. So after I had attended a workshop with Lynn, and when Hillary gave out the request of maybe some technical kind of advice, I did decide to reach out to Lynn, and she's very gracious to join us. So those that were registered last week, thank you for making the adjustment. Lynn had graduation with her daughter, so that was more important, obviously, than this. So hopefully all that went well, Lynn, and we're very pleased to welcome you here today. Do you have a presentation you want to share, or what are you? Are you just going to chat? Okay, so you should be able to click on the share button. I'll stop presenting what I have.
Okay. All these different systems, everything is in a different place.
It is. I think I have the permission set that you should be able to share. Good morning, Kelly. Welcome.
Morning.
Okay, I'm going to have to. This one is a little different. I normally use WebEx, so
Okay.
I'm just gonna bear with me a moment, and I'll find my document.
Yep, not a problem. Yeah, I think one thing I've discovered over the last 3 years is if I was really tech savvy, I'd try to create the ideal platform. Because each platform has certain things I like and certain things I don't like. I don't like WebEx. I've done WebEx and I don't like that one at all. And Teams seems to be a lot of my not-for-profits and government clients are all using Teams. So I tend to default to this one now most recently.
So that comes with Office 365, right? Which most people get for free.
Yeah.
Profits get it for free. So
yeah, so I just upgraded actually to be able to get the registrations that I asked you folks to do, which gives you those emails out to say here's how you join and so on, and it gives me a list. But it's dirt cheap. It's $18 a month to have a business 365. My previous platforms I was paying hundreds of dollars, so pretty cheap.
you can't beat free if you're a nonprofit. So.
Free if you're not profit, and you don't need those extra bells and whistles. Absolutely.
No, but even through Canada Helps or through TechSoup, you can get the upgraded version, right?
Okay,
yeah.
Through Canada Helps.
Through TechSoup, yeah.
Oh, okay.
If you're familiar with TechSoup.
I am not.
Yep.
Want to share while we're waiting?
Oh, you're. I would have figured you'd have been a nonprofit guru. TechSoup, in a nutshell, I mean, if you're a nonprofit, you definitely should check it out. TechSoup is a charity that gives away technology to other charities for free, basically. So you can get your Google Drive for free, Google Professional Access for free, computers for free, monitors, antivirus software. It's all you need is if you're a charity, you get a bit better, but if you're a nonprofit, you still get access to all that stuff for free just based on your business number.
Okay. Well, awesome. There you go, Lynn. You're up and going.
Okay, so if I move to another screen, did you it just moved? So you're seeing the screen, okay. Because on some, if you do it this way, it doesn't, so it's a bit of a, as I said, I'm used to WebEx, but okay, hi everybody. Excuse me. Thank you to Carol for inviting me here today. My name is, as Carol said, my name is Lynn Kendall, and I am a chartered professional accountant and or CPA, as it's more commonly referred. I teach at Grenfell campus which is the campus of Memorial University, and I teach in the business administration program, and I teach accounting and finance. I also have recently expanded into other teaching categories, where last semester I did, in addition to teaching finance, I also taught an experiential course where I recruited students. We typically would offer an income tax preparation service for members of the community. For anybody that might be familiar with the Community Volunteer Income Tax Program. That's a program offered by Canada Revenue Agency, excuse me, where volunteers can apply to be a volunteer and prepare income tax for members of the community. So I've been doing that with, excuse me, something in my voice today. So I have been working with that program for many years and recruiting student volunteers. The students have really enjoyed it. They get experience. They enjoy helping their community. This past semester, I decided to formalize it and make it into an actual university level course where they received credit for the course. And in doing so, it was a fantastic experience. And the other course that I newly developed for the last semester was a course in Indigenous business. I felt it was important for students to Indigenous business is not an area that's you would normally see in popular media or in news media. If it is, it's normally in a negative light of some disasters, some harm has occurred. I think it's important to hear the good stories as well as the bad when it comes to our Indigenous peoples. So I developed a course around that as well. So. And I also do things like this. I do presentations for the community on various topics. This particular presentation is prepared by CPA Canada, and I am registered as a volunteer with them, and I do deliver these financial literacy sessions. I'd like to begin just by finding out who's in the room with me, just so for context. I'd like to know whether you're a director, whether you're an employee or a volunteer, or what your connection to the not-for-profit world is. And if you don't have any connection right now, that's okay. There's never miss an opportunity to learn. So
I can do that for you, Lynn. I'll run down the list.
Okay.
So Andrew, I'm going to start with you. Andrew's got about 7 hats that he wears, and so we'll see which ones he tells you about.
Okay. Hi, everyone. My name is Andrew Hibbets, and I'm an Economic Development Officer for the West Coast of the island with Horizon TNL. So Horizon TNL, formerly known as Rede TNL, is a bilingual economic development organization, and our main office is in St. John's. There's just me here on the West Coast, and usually we have somebody in Labrador. And that position remains open. So if you know anybody that might be interested, certainly reach out. I do wear a number of other hats. I'm on the board of directors for several different organizations. So there's Tourism Southwest, Our Lady of Mercy Complex Committee, Sir Thomas Roddick Hospital Foundation, Long Range Small Business Committee, Bay St. George Pride, and I know I'm forgetting one. Oh, Community Education Network. And yeah, I think that's everything. But okay. Voila.
Excellent. Thank you, Andrew.
Andrew, we were at a session together last week over at the Port Corporation, the Community Connections.
Yes.
Yes. Nice to see you again.
Nice to see you as well.
Excellent. And Andrew's out on the Southwest Coast in office in mainland and joining us today from Stephenville.
Yes, I'm glad you clarified that, because I had Stephenville office in mainland, but sometimes I don't know if people realize that there's a little community on the Port-au-Port Peninsula. It's called mainland, so it would be a long commute if I was going there once a week.
Yeah, exactly. Up to Hillary and then Jamie.
I'm joining from a few, I guess, different nonprofit backgrounds. I'm a retention coordinator with the Study and Stay NL program. So in that role, an employee trying to help our board kind of get up to speed on some of the kind of more technical aspects of running a nonprofit. I'm also working with an organization called Co-Housing NL. They're trying to form a co-housing community in Portugal Cove, St. Philip's, and they're looking to form a nonprofit housing co-op. There hasn't been a new one formed in the past 20 years. So a lot of administrative figuring out how does it even work nowadays and how can we make it work in Newfoundland. I sit on the board of Co-Housing NL, and I'm also a co-founder of Reclaim Community CDO. We're a nonprofit trying to work on innovative infrastructure projects across the province. So a few different hats and trying to learn, because I feel like I don't know enough about the legal and accounting aspects of everything that has to do with nonprofits. So this is great.
Excellent. Thank you, Hillary.
Thank you, Hillary.
Jamie and then Kelly.
I too, I guess I'm on a number of different boards and organizations. I chair 2 charities, and I also work for a nonprofit in the trails world. I'm the executive director for the Newfoundland Trailway Council. That's my main job, quote unquote. And I also have I write business plans for new entrants in agriculture as well, which I did full-time pre-COVID, and now it's part-time after COVID, because we all had to pivot and find other things to kind of make some money at the end of the day. So I'm the president of the Barbershop Choir, which is a registered charity. and the Trailway Council has a registered charity arm as well, which I also chair. And I'm on a couple of other boards as well. So, you know, I had 20+ years background in nonprofits, but it's always nice to see some of the financial stuff, because I know the world is changing in that financial world. Because we used to get review engagements, which now need to be done by a CPA now, and not a the one lower down. And so that's all. So it's been an interesting year for us, because we've had to try to find a CPA, which is not easy to find in the community, to do our audit statements, which we had to have for Revenue Canada and for government. So it's nice to see this kind of discussion going on.
Excellent. Thank you, Jamie. Kelly, and then Terry Lynn.
My name is Kelly Lynn, and I'm currently a student with the College of the North Atlantic in the business marketing. And I thought it was my background and my history is I've worked for either municipalities or not-for-profit for the past 20+ years. So I've worked with the Autism Society, and I've worked with the World Broomball Championships, and I've got quite a variety of backgrounds going on. But going forward, I'm hoping to start my own consulting business, marketing, event planning, and consulting, and not-for-profits would be one area that I'm looking to get into again. So that's why I thought it would be pretty important to come today.
Excellent. Thank you. Glad you could join us. Terry Lynn.
Good morning, everyone. My name is Terry Lynn Robbins, and today I guess every day, I am the co-owner of Robbins Family Farm in Deer Lake. But today, I guess I'm wearing my Newfoundland Labrador Federation of Agriculture hat. I sit on their executive as the Secretary Treasurer for the last 8+ years, and I am the chair of the Agriculture in the Classroom Newfoundland Labrador as well, and help out with a whole bunch of other things.
Excellent.
Hi,
Thank you.
Nice to see you again.
Hi, Lynn. Nice to see you too.
And Samantha.
Hi, I'm with Atlantic Edge Credit Union as the manager of commercial services here. So I help a lot of nonprofits when it comes to the lending side of their business. So I was really looking forward to kind of see it in depth, kind of go through the financials. On top of that, I am also on the board of directors for the Treehouse here in Deer Lake.
And I believe you were at that session last week as well.
I was indeed.
And you were at Startup Weekend as well?
I was indeed.
We're just crossing paths all over the place.
Absolutely.
I know my husband makes fun of me because somebody comes on the news and he's like, I know you facilitated them, right? And I'm like, yep, pretty much. Lynn, for myself, what you may not know, I'm the chairperson of the Pasadena Heritage Society. We just became incorporated last fall. So we were in our first, we kind of had our first AGM 2 weeks ago. We're trying to do things from the start. Thankfully, I'm not the treasurer. I do have somebody who's got more experience than that. So I'm really excited about this, and I'm going to be sharing this recording with my committee so that they can get up to speed. And I'm also on the Pasadena Library Board as secretary. So I have a connection in that. And as I mentioned, then several of my clients are in the not-for-profit sector. So I'm really excited to have you here. So thank you.
Well, thank you. Thank you, everybody, for introducing yourselves. It's always great to know who I'm speaking to. And that way, you know, when we have conversations, we may be able to draw upon our own experience and whatnot. So we've got a great spectrum here of volunteers of all different types of organizations, from agriculture to sports to community services, banking. So we're seeing quite a bit of interest from the not-for-profit world. So the presentation that I'm going to do today is kind of a companion to a document that I've asked Carol to share with you. It's like a 75-page document on not-for-profit financials. So terribly boring. If you have insomnia, it's the perfect document to help overcome insomnia. But it's it has some useful information, and I will refer to it a few pages here and there as I go through. As I was reviewing this presentation a few days ago, I felt it was a bit too in depth for for the intent of today's session, or what I understood to be today's session. So I took out some of the things. They were really getting into how the how-tos, how to account for unrestricted funds and restricted funds and all this stuff. So I felt it was more information than what was needed. So I did remove about 4 or 5 slides, but I think what we have left here is sufficient for a good understanding of the responsibilities of executives and directors and auditors of not-for-profit organizations. I myself am a member of I have been members of not-for-profit directors over the years. I've kind of whittled that down. And right now I am a director on a Crown Corporation, Marine Atlantic. So I've kind of reduced because those of us who are used to volunteering, it kind of gets addictive. You want to volunteer more and more and more. So by removing myself from some other boards, I have more time now to do fun things like these one-off events that I enjoy doing. So keeping your mind and body healthy. So I'm really happy to be here today, and thanks again to Carol. So if there's any questions, Carol, I probably won't be able to see any hands being raised or any comments in the chat. So if you wouldn't mind monitoring that for me, and then we can have a discussion. And I don't mind, and I encourage discussions happening throughout my presentation.
Yeah, definitely. And just to let you know, Lynn, I just sent the document to everyone, so it's in your email, folks.
Okay. Okay, yeah, it's a bit of a beast, but it does, at least maybe you might be able to refer to a single section or a couple of sections as needed. So today's presentation, it's broadly focusing on the board's role and some key accounting concepts and reports. I won't go through the specifics of the outline that's there in front of you, but I will talk about best practices. But I will say that depending upon the size and the nature of the organizations that you're involved in, that you might notice some differences. Some things may apply to you, other things may not apply to you. We'll talk a little bit about at the end of the chapter or end of the presentation about fund accounting, which is a specific type of managing financial records for an organization. So overseeing the financial affairs of a not-for-profit is a key responsibility of the board and of every member of the board. So sometimes we get this impression that the a finance committee or finance and audit committee, that they're responsible for the financial stuff. So anybody that's dealing with any other part of who's not directly involved, then they're not responsible. But if you are a member of a board, and regardless of the type of organization, whether it's a corporate organization, a not-for-profit, a community, a Crown Corporation, every single board member is responsible. This is what we call a fiduciary duty or a responsibility to your organization. So yes, it might be that the treasurer or the finance and audit committee might be the ones who are focusing and spending a lot of time reviewing and assessing financial reports and financial records. However, that does not absolve the rest of the board from ensuring that the organization has good financial records and is in a healthy financial position. So just as an example, some of the things that all directors have a responsibility to make sure that money or funding is spent in accordance with the criteria for which it was received. So whether you apply for a grant from government or some other agency, or you have donations, or you sold tickets, or you have donors setting up a fund for a particular purpose. The job of the board is to ensure that that money is spent in the manner in which the funder required it. Now, oftentimes we would rely upon executive members to make sure that that's happening, but ultimately the board bears the full responsibility of every dime that's spent for that organization. The board is also responsible to make sure statutory obligations such as payroll deductions and income taxes are being paid as required. And that, excuse me, the internal controls are established and in place, and that they are effective. And that again is a responsibility of the board. And again, a lot of these things happen in conjunction with management of the not-for-profit, whether it's a manager or CEO or executive director. They go by various names, but again, they work together to ensure these things. But ultimately, it's the board's responsibility. Unfortunately, nonprofits are particularly vulnerable to fraud because oftentimes they don't have strong internal controls. So this could be that one person is responsible for collecting the money, reporting on the money, depositing, doing the bank reconciliations, writing the checks, paying the vendors or suppliers or employees. One person having all that control leads to an unfortunate situation that we often see too many times in the nonprofit world, and that's fraud, because one person has an incredible opportunity to take money from the organization. Some of you may have been involved in organizations where things like that have happened, but if there are strong internal controls in place, which are overseen by the board, then the opportunity, there's kind of like the trifecta that you see on some detective shows, that the person had the motive, means, and opportunity. Well, somebody who's going to defraud the money, then they may have a motive. They may have gambling debts. They may have debts built up from a failed business. They may need money because they're spending beyond their means. So that's their motive. And then if they have the means, well, then they have the ability to take the money because they have some type of connection. And then, of course, the opportunity is they're controlling everything. So be very cognizant of that. And this is where your auditor should be coming into play and testing and evaluating those internal controls. So some of the common barriers or board excuses that certain board members try to absolve themselves, saying that they don't need to get involved in financial affairs, is one, because we have an experienced accountant on the board. So I've been that experienced accountant in some cases. It's like, okay, thank God I don't need to worry about this anymore. Lynn's here. But that's not the case. I might be responsible for liaising with the financial reporting and making sure that checks are signed after they've been completed. Oftentimes the treasurer and the executive director have dual signatories, so we both would sign checks, and they would work more closely on the financial issues with some of the staff members. But that again does not mean that other board members are able to absolve themselves. At the end of the day, every single member of that organization or that board is responsible for the financial performance and financial management of that non-for-profit. So another thing is that shouldn't the board be focusing on an organization's mission? Absolutely. Significant portion of our time should be spent on advancing the mission of the organization. Again, but part of that mission will go glove in hand with financial management. Finances will often be required to advance the organization's mission, and which is necessary. So if there's weak financial controls, there's poor financial management, then that's going to affect the ability of the board to proceed with their mission. And accounting is just too complex for me. And indeed, that's true. But no one's asking you to be an accountant. They're asking you to understand or to read and understand financial statements. And if you don't understand, ask the questions and keep asking the questions until you do understand. That is your fiduciary duty or your responsibility to the board, is to understand the financial the financial reports, and ask questions if something doesn't look right to you, or if something it's beyond, I don't want to say beyond your comprehension, but if it's not making sense, it's not adding up to you, you as a board member have the right to keep asking those questions and keep asking until you are satisfied with the answer. And the last excuse that we see is, isn't this the job of the auditor or management? Partially, yes. There's 3 important parties in the financial management tasks of a nonprofit, and one is the management of the organization. So the executive director, CEO, manager, whatever title they go by. It's the board of directors and the entire board, not just the finance committee, not just the treasurer, but the entire board. And then ultimately the auditor, who is an independent third party, who's going to come in and look at your financial records and determine whether they can determine whether they can assess the financial records and offer an opinion that they are fairly presented, or for some reason, if they can't, you'll see what's called a qualified report saying we're not unable to provide a level of assurance on the financial records. I'll just stop there for a sec. Does anybody have any questions?
Just make a comment. I know for the Heritage Society, we were a group of passionate people with a bank account attached to me. And one of the reasons we wanted to become incorporated was so that it was no longer just a bunch of women collecting money. So this is kind of validating, some of the steps that we're doing. And Samantha, we've worked with Samantha's organization to get, a proper bank account and signing authorities and all of those things in place, so that exactly what you're saying, that there's some oversight and not just Carol Spicer taking some money in an account.
Yeah, and exactly. There needs to be those controls over and the money that's being collected. Cash is our most vulnerable asset in any organization. Everybody wants it, everybody needs it, it's untraceable. So, that's why cash drawers need to be locked up. Any excess cash that the organization, whether it's a business or a retail outlet or a not-for-profit, excess cash should be deposited into the bank as soon as possible, because we don't want that left hanging around. Did I see somebody with a hand up?
Yep, Terry Lynn's got a question.
I do. Lynn, do you or anybody else on here, I guess, or the Federation of Agriculture, we're looking at developing some new and improving some old financial policies. And I'm wondering, where would be a great place to, I'm all for not reinventing the wheel. So where would be a great place that we could look to see what's out there for financial policies for a not-for-profit organization?
I would probably start with Community Sector Council. Okay. They do have quite a few resources. Given the specific nature of the NLFA, you might want to talk to some other provincial federations and see if they're willing to have a chat and discuss, maybe meet with their financial people or their executive director. Agree, reinventing the wheel is not necessary.
Absolutely.
So what you can do is just look in those couple of resources, and at the end of the day, run it by. It may cost you a few dollars to get a qualified accountant, but just ask. Here's my situation. What do you think? Could be a retired accountant who, maybe not doing much, but I'll take on a small project like that. I'll review your policies and think that it's acceptable from a control point of view. But at the end of the day, I'd get that professional eye on it. You guys can do the work that will save you some money, and then that professional eye can come in and say, yeah, you might want to go this direction, because you don't want to make it too harsh. That makes it difficult to operate, but you just want to make sure it's done safely and appropriately.
Yes. Thank you.
You're welcome. All right. Okay. let's now talk about the roles and responsibilities of financial reporting. So I did touch on this, that there are three very important groups of people involved in financial reporting for a not-for-profit. Management. So if we look at, I think Jamie said you were the executive director of the Trails Association, I believe. So it would be your responsibility to, or somebody who works for you, to prepare financial reports, exercise that judgment on how certain items are treated. And that's when we'll look at things like, is it an asset or is it an expense? Is it a liability? How the money that we have coming in, how does that need to be treated? And also develop internal controls. And that's the important piece, is that managers are responsible for preparing or developing internal financial controls. The board, on the other hand, are the overseers. They're the ones that would approve. So for example, I'm the vice chair. It's not a not-for-profit, but I'm the vice chair of Hollypoo First Nation. I'm vice chair of their finance and audit committee. So what happens is that the managers prepare budgets, we approve them at the board level. If any change in policy has to come to us for approval. We're just a committee of the board. The ultimate board is the elected council, so it has a different governance system. But overall, we can as board members, we are responsible for ensuring that that work that management has prepared is correct and appropriate for our organization. The auditor is that independent third body. They come in and they do an assessment on our financial statements, and they give us a professional opinion on the financial statements. So those financial statements can be mentioned qualified and unqualified, and we'll talk about qualified and unqualified reports. But three important parties from an NPO perspective when it comes to financial management.
So Lynn, I've got a question on that. If you don't have paid staff, if you don't have an executive director, is your executive of the board taking that management role?
Yes. Yes.
And then you put it out to the full board for
Yes.
those changes and approvals?
Yes.
Okay. Thank you.
Yep. The board and auditor relationship is a key relationship. It's a very important relationship, because the auditor will report to the board on management's work. Okay, so the auditor is evaluating and assessing the financial reporting prepared by the managers, but the report goes to the board. So it's a bit of a cross relationship here, but it ensures, from the board's perspective, it ensures that the managers are doing their job, or there are some areas of concern that the auditors have noted. And these auditors are professionals that are trained in identifying peculiarities. They're trained in knowing when controls are weak or that they're effective. Sometimes controls can be too strong, and it makes doing business more challenging. So the board will select the auditor. Sometimes managers can recommend an auditor, but ultimately it's the board has to be happy who the auditor is, or the auditing firm. They recommend, and typically the recommend is appoint at the annual general meeting. There will be, if an organization has an AGM, you will often see a line there of the annual appointment of the auditor, so that any member or any member of the public can see that, okay, firm XYZ is auditing the financial records of this organization. The auditor often will meet with the board throughout the year, not just during the audit season, but particularly during the period of when they're auditing the organization, to report and say, this is what our audit plan is. This is how we're going to do it. This is how much period of time is going to be expected, unless we find something peculiar that we need to investigate further. And then the auditor will meet with the board, and we typically what we call in camera. So for those of you that may not be familiar with that term, in camera, it's when the board meets without any other parties, including management. So it's just in camera, just the board members meeting. Oftentimes in board of directors meetings, the managers will attend, but if it's an in-camera session, the managers are not there. So you can have an in-camera with the auditor, where the auditor would report on the findings of their audit. And this creates security and control and good, sound financial management practices. There's also internal financial reporting. So typically, and we should not be only receiving financial reports at the end of the year. So we should be informed of statement of profits and losses, statements of assets and liabilities, and surpluses or deficits. These should be reported to us on a regular basis as board members. Could be monthly, could be quarterly, could be twice a year, but there shouldn't be any surprises at the end of the year when the auditor has completed their reports. We shouldn't be told we're insolvent or we're bankrupt at the end of the year. So the staff of the organization, they will typically create financial reports and use them. Then there are some financial reports that are submitted to the board and committees, and with the organizations that I work with, for both the two main organizations that I'm still involved in are Halipu First Nation and Marine Atlantic. I'm on the I vice chair the finance and audit committee for Halipu, and I'm a member of the audit committee for the audit and finance committee for Marine Atlantic. So what happens is that we meet quarterly, and the financial reports are presented to us by the staff of each organization. So we're told about what projects are over budget from Halipu or what's under budget, and same thing from Marine Atlantic. And so in a quarter, so if we have any concerns, any issues, and in our Marine Atlantic meetings, our auditor comes to every finance committee meeting. Our auditor for that organization happens to be the Auditor General. So representatives from that office is with us at every meeting. And then we do have a in camera with that auditor at every board meeting, every committee meeting. So we go through this natural cycle. So typically, depending upon the time of year, we budget for the upcoming year, and then we present it with the audited statements for the previous year, and then we would look at any internal in-year financial reports. From my involvement, it's been on a quarterly basis. And when we receive the budgets and the annual audited statements, depends on the year end for the organization. So it depends upon when you when your year end exists. So that's for internal financial reporting. So that's to keep the board informed and management informed on how well or how poorly we're doing from a financial perspective. But there are also external financial reports that need to be prepared. So there are many stakeholders that have an interest in your organization. Funders would be the most important. So like donors, people donating money to the organization for example, maybe the SPCA received a donation in somebody's will of $1,000, and it's to go to buy cat food for cats. So if that means it's not meant to buy dog foods, it's not meant to pay the heat and light, it's meant to buy food for the cats. So very specific. So sometimes we do have these specific donations, or sometimes it's just a general donation. Our funders can be governments, so government grants or other large organizations that give grants to other NPOs. They may have restrictions on their funding or reporting requirements on the funding that they provide to you. So Terry, as a member of the executive of Newfoundland Labrador Federation of Agriculture, I remember my days from working in agriculture. We would give grants to the NLFA for a project, and they would have to report back to us on the money that was spent, and some form of a report is what we would expect. And we would do that with all of our funding projects. Canada Revenue Agency, of course, they require all not-for-profits to submit an annual filing statement, which includes financial information. We have members. So, for example, if you're a member of a sports association, so we'll look at minor soccer, Corner Brook Minor Soccer. So parents are paying fees every year for their kids to learn to play and to play soccer. And parents want to be sure that that money is being spent on the program and not for other purposes. So it's just these assurances. So, but generally this type of information is presented at an AGM. So smaller community sports organizations would be less structured than some of the more corporate organized boards, even though they may be not for profit like me. Like they're government related agencies, the two that I'm now involved in, but some of the smaller ones, they have to be very careful about, because that's where we see issues with weak internal controls, opportunities for theft, employee theft, and fraud. So, and money not being spent in the manner in which it was intended. So some of the common information requirements are often met through the audited statements. So the organization can receive an audit, and many of the questions that any of these stakeholders have typically can be answered by reviewing the financial statements. There also may be some special purpose reports. For example, a specific funder, if somebody, maybe there's a wealthy Manchester United English football player who came and really visited Newfoundland and really liked what was happening with the Corner Brook Minor Hockey Association. So he has decided that he's going to donate $100,000 to Corner Brook Minor Hockey. I'm sure it's a pipe dream, but they would want to, it was just a gift, but they're owed some responsibility that the money was going for new equipment, new training gear, paid coaches all year round, extend the seasons and whatnot. So there are examples of, so those would be kind of one-off reports that we would show to these particular funders. Does anybody have any questions about internal reporting or external reporting? Okay, well, let's carry on. So I'm going to talk a little bit about accounting, get a little bit more involved in the presentation of financial reports. So the first financial reporting concept I want to talk about are assets. So assets, by definition, this is not the CPA handbook definition, but basically the definition is that things that are owed by or things that are owed to the not-for-profit. So let's look at, okay, I'll go Marine Atlantic. Of course, we have 4 ships, we have buildings, we have equipment in buildings. That's a large organization. Smaller organizations may have, so it's a sports organization, they may have equipment, they may have uniforms, probably not a whole lot else. Not likely, I know I'm thinking here in Corner Brook, they probably would not have own a building or a vehicle. But some of you may work with not-for-profits that do own a building, or buildings that own equipment, that own equipment such as office equipment. Or, Tyrlin, I don't know, the NLFA, they may own tractors, they may own farm equipment, but they would have a greater breadth of those physical assets. Cash is a significant asset that any of us that have cash, any of us that work with cash in organizations, that's our most significant asset. So we typically will see assets or divided into 2 categories: current assets and long-term assets. So current assets are those items that are utilized or expect to be utilized within 1 year. So if we got cash, we expect that we would spend that cash in 1 year, or transfer it to an investment if we have excess cash. We have things like accounts receivable. That's money that's owed to us. So you think, again, think about that sports organization. You may have 120 kids signed up. So far, 100 have paid, 20 have not paid, but they're still enrolled in the program. So that 20 that they are still owed to us, that's an accounts receivable. And sometimes there are cash equivalents. Maybe an organization has excess cash that they can invest. They can buy a GIC, something low risk, but can earn some money for the organization. That's called a cash equivalent because it can be turned into cash fairly quickly. The other category of assets we often see in not-for-profits is a long-term asset. So these would be things like buildings, equipment, vehicles, or some investments that they plan to keep as an investment for longer than 1 year. So we're not planning to take the cash out and use the cash within the next 12 months. We're going to keep it for until we really need it. We don't need it right now. So it's considered a long-term asset because like buildings, equipment, and vehicles, we expect to use them beyond 1 year. Liabilities, these are debts. These are amounts that are owed by the non-for-profit to others. So things we often see are accounts payable. There might be a bank loan. There might be a mortgage if a building was purchased and we got a mortgage for the building. And accounts payable would be things that are due typically within 30 days. So that could be the telephone, could be rent, heat and light. Typically, those would be the examples of things that, you think about your own household bills you got to pay within the next month. A business has the same thing. These are things they have to pay within the next 30 days. Sometimes they may have a bank loan, which helps finance some of the missions of the organization. And as I said, a building would be considered a long-term liability because the building that we saw in our asset section is a long-term asset. But if we got a mortgage to pay for that building, well, then that obviously the mill is going to take us more than a year to pay back a building. So that would be considered a long-term liability, except any portion that needs to be paid in the next 12 months. So we would just pluck out. So say we were paying $1,000 a month in principal. So $12,000 a year, $1,000 per month, it's going to be plucked out and put into the current portion along with accounts payable and bank loan, which are those amounts that need to be paid within 1 year. Okay, I'm going to stop there for a second to see if there's any questions. It was a bit of a mouthful. Anybody who works with financial statements for a corporation, you would see these examples of assets and liabilities on their balance sheet as well. Okay. So now let's look at revenues. So not-for-profits can get revenues in a bunch of different ways. They can get grants. Often you have to apply for a grant. Obviously,
I said, we hope.
we hope. Yeah, I'm saying it's easy to get the money, but they have some sources. So grants, contributions, typically comes with a donation, but typically these are we would have to apply, and we would have to have some specific purpose in mind. There might be a fee for service, which generates revenue. So perhaps you trying to think of any of the organizations here. No, I'm not seeing anything right off the bat, but perhaps there's a way in which the organization, the not-for-profit, offers services that people would pay in return for the service, which is different than a membership fee, because a membership fee would be, for example, if your kid is in minor. So these would be the fees you pay to be a member of that organization. Some non-for-profits have retail arms where they sell goods or services. And if they have a little bit of cash extra that they can invest and they can earn some interest on it, then that would be considered an investment income. So there's a couple of different ways that we can generate revenue for a not-for-profit. Some of the expenditures. Excuse me for yawning. It's very cold in this room. It's making me yawn. Expenditures are also shown on a with revenue and expenditures. We typically see these on a statement of operations, sometimes called an income statement. And the expenditures for many not-for-profit, their biggest expenditure is their salaries, paying for their staff. For some, if it's hockey, they don't have huge staff. So minor hockey, their biggest expense would most likely be ice rental, renting the ice in the stadiums. So salaries, rent, office supplies, and what we call depreciation of capital assets. So if they have any capital assets, whether it's the equipment or if they have a building or a vehicle, other equipment, then they would depreciate that, excuse me, over the useful life of the asset. So think about, a lot of people think depreciation is the decline in market value. That's not how we look at depreciation in an accounting perspective. We look at it from the point of view of we are spreading the cost of the asset out over its useful life. But again, a technical and accounting issue. Your auditor or somebody financial person would be able to advise you if you have any deeper questions on capital assets. And not many of these organizations actually have some assets. So how we report on net revenue. So because you are a not-for-profit, you don't report profit. You report net or excess of revenue over expenses. Because if you reported net income or net profit, that would imply that you are a for-profit organization. So just to distinguish between a not-for-profit financial statement or income statement and a corporation income statement, we use the term excess of revenues over expenditures or deficiency of revenue over expenditures. And you see that formula there in the blue box, that net revenues equals total revenues minus total expenditures. So on an income statement, we see revenue minus expenses equals net income if we have more revenue than expenses, or a net loss if we have more expenses than revenues. So in the not-for-profit world, we use this phrase, excess of revenues over expenditures, or a deficiency if we have more expenditures. Just to distinguish between the for-profit world. Ideally, not ideally, but by definition, being a not-for-profit, the objective would be to have net revenue at zero or as close to zero as possible, so that you're not, basically you're spending all your money out in programs and services every year. Some organizations get looked upon in a negative light if they are seen as hoarding too much money, meaning they're not delivering the programs or services that they should be. Or they could be buying assets that could help, depending upon the type of service that they're providing. So hoarding too much cash can be questionable for a not-for-profit. That's not to say that I agree that everything you take in should be spent in that year. I do not agree with that at all, because there are always going to be unexpected expenditures, always. So I firmly believe that there needs to be a cushion. And once you have that cushion in place that you think you need, whatever that may be, then anything that you have accumulated over that in terms of cash, maybe one consider reinvesting in programs or services.
This is where we struggle a lot, because government funded, we're 99.9% government funded.
Yep.
Government requires us to spend every penny in order to get that penny. we don't have the ability to hang on to any of it, but it's all program based dollar for dollar.
Yeah, and as long as you feel confident you're going to get that money next year as well, then that makes it a little easier to spend everything that you did get this year, because by spending by the assurance or the confidence of having money next year knows that your program is going to exist. Many not-for-profits, they don't have government support, so they need to build up their own cash reserves to keep that cushion for themselves.
At one point in time, government used to pay an administration fee.
Yeah.
It was a 5 to 10% little bonus fee you could kind of allocate to a little corner for a rainy day or
Yep.
things like that, or even HST rebate, and they now even caught that back too now.
Yep.
So you can't even use that anymore. But it used to be our little rainy day fund, right? Because you get half your HST back, and then that stick that in one corner, you know, in the event that you needed some cash. But that don't work either anymore.
No, that's right. That's right. No, yes, they pulled a few years ago. They did start pulling back on the financial, the administration fees. Yeah, yeah. Alrighty. So I'm going to talk for a few minutes about contributions, and it's a very kind of a specific. And this is where the next few slides got really technical into a bunch of different ways to account for them in your financial records, but I decided that I didn't, that wasn't necessary. But a contribution is a payment or a receipt of money that an organization received without having to do anything in exchange. So for a business, if we're being given money, well, then there's an expectation that we return a product or a service. For a grant, similar thing, that you want the grant for something particular. But a contribution are typically non-repayable. You don't really have to do anything for it, and is really focused on the not-for-profit organizations. And these contributions can amount to a significant portion of what the not-for-profit receives every year, and they become really reliant on it to deliver their programs and services. So government funding, if you receive a government funding and it's not for a specific purpose, then it's considered a contribution. Individuals can also provide you, or organizations. As I said, you know, maybe there's a wealthy corporation out there that likes what you're doing and wants to give you a contribution toward it. Just say, I want to help you with your process. So there's 3 types of contributions. There's a restricted. This is where a donor does put specific conditions on the money that they invest. I know with another organization I'm involved in, they do some it's purpose for educating business education for Indigenous youth, and we were given a sum of money for that particular project, and for that project they didn't say, you know, you can only spend it on books or computers or whatever. It was, I don't care what you spend it on, but it's got to be going towards that program. So some donors can restrict. Then there can be an endowment contribution, whereas, okay, I've got $5,000, I'm going to donate to this not-for-profit. The $5,000 has to be maintained. You can't spend the $5,000, but you can invest it, and any money any interest or dividends or any money that's spun off that can be used to spend, but that $5,000 has to be maintained at all times. So that's we call an endowment. And then there's unrestricted. So again, sometimes this is what the government does. They don't impose many or any restrictions, and the organization can be free to use it as they see fit. So I'm going to skip through the slides. On the next 4 slides would have been painful. So I'll save that for my accounting students.
There you go.
So here's just a case summary of the key financial statements, and you'll see that there are page numbers listed against each one, and they correspond to that guidebook that Carol sent to you. So the statement of operations, we sometimes see that called an income statement. But it's the summary of the revenues and expenditures over a period of time. And it will tell you about any excess of revenues over expenditures or any deficiency of revenue over expenditures or loss. Statement of financial position for decades, for centuries, this was called a balance sheet. So in the last decade or so, we changed the name to statement of financial position, and it tells us kind of how healthy are we. So it's our financial status. These are right now, today, here are all of our assets, here are all of our liabilities, and the difference is our net assets. Do we have more assets than liabilities? In a corporation financial statement, that would be called shareholders' equity, that third section. And statement of the changes in net assets shows us where look at the asset values we had at the beginning of the year, what we had at the end of the year, and how things changed. And then there's also a statement of cash flow, because as I mentioned earlier, cash is critical for our any organization, and so critical it gets its own financial statement. And your auditor would prepare a statement of cash flow that showed you where you spent your cash in which of 3 general types of categories. So these statements can be used to assess your performance. So you look at from one year to the next. So here's an example. In the current year, we have $10,642 million. Wouldn't your organization love to have that? And the previous year,
we Lynn, if we did. We'd have a whole team hired.
Oh, you would, yes, absolutely. You would have CPAs coming out of your union.
Yeah.
But last year we had $9.9 million. So you can see, you can do some analysis here to see, well, that represents a 7% increase in revenues over last year. But look at our expenditures. Last year we had 9.8 million in expenditures. This year we had 10.6 million. So our expenditures went up 8%. So revenues went up 7, but expenditures went up 8. So you see that our bottom line was 70 million last year, or 70,000 last year. This year it's 40,000. We've reduced, our revenue went up by 7%, but we ended up seeing a reduction of $30,000 because our expenditures increased. So your financial statements can be used to do that little bit of analysis and calculate changes from year to year and take a percentage. Okay, expenses were what percentage of 99.8 over 9.9? What was that percentage? And that will tell you what your percentage of a ratio of expenditures to revenues. So those of you that really hate math, I apologize. This is a little bit of a mathy section. So you might want to get somebody to do it for you if you don't really like it. But if you like me and you do like math, then you can crunch the numbers and see where significant changes were made. That revenue section can be, this is just showing one line of revenue, but that can be expanded if you have different types of revenue through sales, grants, contributions, whatnot, and see where the changes were. See where are we getting most of our revenues from. Same thing with expenditures. What's our biggest expenditure? And how much more did we spend on that this year than over last year? So it's lots of nice, fun, exciting math stuff that you can do with financial statements. You can do the same with the statement of financial position. Here's the example. Currently, we have $4.165 million in assets. Last year, we have 4.07 in assets. So our assets increased by 2%. Looking at our liabilities, this year we have 118,000. Last year we had 85,000. So we had a change of okay, it's not telling me what that percentage change is. The deferred contributions increased by 40%. So, okay, deferred contributions. So our money yet to be earned increased. I'm not going to get into the deferred contributions would be explained in one of those slides that I deleted, but so we don't need to worry about that right now. But overall, our net assets increased by 2%. So we went from 2.75 million last year to 2.81 this year. So there was that increase in net assets. We can also do things like calculate working capital. Working capital is your current assets minus your current liability. And it's a quick and easy evaluation, looking at how do I have enough cash or cash equivalent assets to cover my current liabilities, which are due within the next year. So our current assets are $2.5 million. Our current liabilities are $347,000. So we do have more current assets and current liabilities. And you see up there on the top of the screen here, we have working capital formula of current asset minus current liabilities and a working capital ratio. Typically, we want to see the working capital formula as a positive number because you want to have more assets than you want to have current liabilities. The working capital ratio is the same thing, but you just divide. Typically, your current asset ratio should be at least 1. 1 is making it kind of tight because it means you have the same number of liabilities as you do assets. So you might want to work on that ratio and make that a little stronger, so a higher than 1. I'll stop there for a second, see if anybody has any questions about anything that I'm chattering on about here now.
This is awesome information.
Oh, thank you. Thank you. So the financial statements, you can look at them, you can read them, but personally, I get better value from reading financial statements. I mean, you can read them at surface value and see, okay, you can see, okay, profit went up or profit went down, or, you know, salaries went up, and I expect everybody's salaries and every organization will increase this year because of the substantial increases in minimum wage. And it's not because many organizations pay minimum wage, but there is the domino effect. So people who were making higher than minimum wage, their expectation is that they will maintain that distance. So whereas minimum wage, and it's going to up to $15 in October. So we will see another jump. So I expect salaries in many financial statements will be a jump over the previous years. So yeah, so that's where I find you get a lot of really helpful information, and you can use your guidebook can help you explain some of these formulas. And if you don't like math, that's perfectly fine. You know, you might know somebody who can say, you know, do you mind just doing these calculations? Because I'm not really confident that I'm doing them properly. So our statement of changes in net assets. So net assets are, we have these categories of net assets reflecting the different categories of the statement of financial position. So, you know, you're going to see, typically this statement is shown kind of like a matrix, like with headings of capital assets, endowments, restrictions, restricted endowments or restricted contributions and unrestricted contributions, and what they were at the beginning of the year, any changes, and what they are at the end of the year. So again, this is something that is not expected. I would not expect an internally prepared financial statements or somebody who prepares the statements internally to show this. I would leave this to a professional to prepare the statement of financial position and the statement of cash flows. I know many accountants to this day hate doing the statement of cash flows. I don't mind it. I find it a little bit fun. But typically, what I said earlier, cash is such an important asset, an important part of every organization. It gets its own financial statement. And what it does, it shows what your cash position was at the beginning of the year, any of the changes that were made based upon these 3 categories: operations, investing, and financing. And I'm not going to get into that. This is the last chapter we get into in my intro accounting course, very last thing. So, you know, we're not here to learn accounting. We're just here to get a general overview of kind of some financial issues. Save this one for the auditors as well.
I think Jamie can probably attest to this. I know when I help clients prepare business statements, their funders want to see cash flow. So that's something that we have to include, that projection of where we think they're going to be, and the ups and downs. Much like a business, you pay your business taxes at a certain time of the year, one shot, but you pay your other stuff monthly, and you need to show those ins and outs. So I can see that would be
And that's
important as
cash
well.
flow projection. So this report, this statement of cash flows is a retrospective look. It's where did the
Okay.
company spend their money? So it's drawing a little bit from that account, a little bit from that account, a couple of these and a couple of those and these changes. It's I want to say it's not as simple as cash flow projection, even though I know cash flow projections are not simple. But it does, it's looking at cash flow projections are forward looking. This statement of cash flow is backward looking. Okay, this is you had $10,000 in the bank at the end of last year. You now have $30,000. So what were the changes? And it's not just one item. It could be 50
Right.
items. So yes, it's a little bit different. Yeah.
Okay, excellent.
So page 29 or no, 28 of your guide talks about fund accounting. And essentially this is just a way of tracking tracking money that has been given to or collected by the not-for-profit. Some not-for-profits, if they have a big enough and diverse enough set of financial donors, then they will set up like little mini funds. So, okay, I'm buying out of this fund. This is my okay, I'll use the trails. I will just say Water Street Trail, although I don't think there's a trail on Water Street. My water or downtown trails. And this is a fund, and that's focused, that's only to be spent on trails with downtown St. John's. And with that, so any assets I buy out of that money goes into that fund. Any liabilities are in that fund. So it's like a little mini financial statement that is created for each fund. Now you could have others that are not collected into funds, but these are kind of just a mini set of financial statement for projects. And I know when I work with agriculture, sorry, go ahead.
Yeah, we do a project based. So every project has its own separate, it's its own separate project, its own separate set of statements within the bigger piece.
Excellent. Yeah, and that's an example of fund accounting.
That's how we can pull the statements for a particular project that a funder gives us, because we deal with a lot of foundations as well. So rather than trying to pick it out of thin air, it's here's exactly what was spent on this particular project in its entirety.
Excellent. Yep. And that's an example of fund accounting. And it keeps things organized, especially when there's reporting requirements that need to be made and you don't want to go digging through, oh gosh, how did I, what did we, we got $100,000 donation. Okay, I know we spent up to 75 on these various items for that project. Where'd the other 25 go? So it helps you recognize that maybe the 25,000 is still there. It's just buried in with everything else. But by keeping everything separate, you know what's left and what you have left to spend. So that's excellent, Jamie. So getting near the end, folks. So now we have our auditor's financial statements. So on page 35 of that guide, we'll give you some more information about that financial statement. So essentially what the auditor does is they're provided the financial statements by management. Typically, it might be just a trial balance, which is just a summary of the accounts, or it could be the income statement and the balance sheet. But then the auditor comes in and they gather evidence to make a determination on whether the financial statements accurately reflect the financial operations and the financial health of your organization. So that evidence could be, okay, I want to see the expense claims for the executive director and all the staff. And I'm going to take a sample of them and I'm going to trace through, okay, the supporting, receipts were attached. It was authorized by the appropriate person, meaning signed by the appropriate person, and the payment was made. So you're tracing through that process. You want to say, okay, we got $50,000 from the government for a project. Okay, I'm going to check and see that we're going to gather evidence to see that $50,000 was spent on that project and not on something else. So things they're going to want to see, they're going to want to see invoices, they're going to want to see bank statements, checkbooks, or however means of payments are being made. If you use purchase orders, they're going to want to see receipts of money that came in from money that you're owed. There's many different sources of audits that of evidence that an auditor will collect. And they will also do tests on your internal controls and procedures. So they'll probably go in and say, okay, I'm going to set up a vendor in your account. I'm going to put an invoice through and I'm going to see if you'll pay it. So those are tests to see if somebody can go in there and manipulate the system and work back ways. So if you're sharing passwords or everybody has equal access to the financial system, then those are things that are going to be questionable and will be identified as a control weakness. And then they'll also look at your accounting policies. So, Lynn, this is where an auditor would come in with, any changes that you have to your accounting policies. They would look at it from at this point as well. So the key thing that an auditor will want to know is that do the financial statements paint the picture that is a fair presentation of the organization's revenues and expenses over the year and for their financial position at this point in time. And the report is going to contain 3 elements, the financial statements, so that balance sheet, income statement, statement of net assets, statement of cash flows, is also going to show any notes. We often prepare notes just to provide more text, more dialogue around certain aspects, and then an auditor's opinion. And that opinion will be the information contained herein accurately reflects the financial operations and position of the corporation or the not-for-profit, which would be an unqualified opinion. They found no problem with it, so they're going to give you an unqualified opinion. Qualified opinion would be we were not able to accurately determine, or we were not be able to assess that the financial statements fairly present, and that's called a qualified opinion. And the number one reason why a not-for-profit will get a qualified opinion is because they can't verify the sources of revenue, especially if it was like cash donations. If it's like a SPCA event, for example, and people are just putting donations in a jar or something, then that'd be more difficult to determine who the donors are. So just to conclude, your role as a director, you don't have to be a financial expert, but you do need to question and probe management and the auditor until you are satisfied that your issues have been addressed. That is your role, whether you are the treasurer, whether you are on the audit and finance committee. If you are just a regular board member, you are still responsible for having some knowledge and expert and understanding of the financial operations of that organization. And continue to ask questions until you're satisfied with the answers. So this is the resource that was emailed to you. So it's probably in the format of a frequently asked questions or just a question and answer, but it's a good guide. It contains a lot of information. So if anybody has any questions now, I did see a pop up a moment ago saying we had 5 minutes left.
One of the things I find challenging is the new world of payments, because nobody wants an invoice and a check anymore. Everybody wants electronic transfer payments or Visa payments, which circumvents the 2-signature rules, and it's a real struggle lately, to get people to actually invoice you the traditional way, which creates the paper trail. It's tough, right? And I'm struggling with how to I guess appropriately do that while keeping the financial controls pretty tight, right? Seems where it's going now. It's
there are systems that are available that means that you can't do any e-transfers unless 2 people. There are ways to mitigate that.
It's just on small budgets. The technology is too expensive for two. So you're in
absolutely.
You're caught in that bubble, right? Whereas you're
absolutely.
It's because we don't have big budgets, and if I got to take a couple $1,000s out of it to do an administrative test, and that means something else suffers somewhere. But at the same time, like, people won't deal with you anymore.
Yeah.
If I could,
Samantha's going to jump in because I know she just set us up as the Heritage Society. Go ahead, Samantha.
Absolutely. So I know from the credit union's perspective, that is something most non-for-profits struggle with, is trying to make sure that you have that two-step authorization. So with our banking system and our online platform, we actually do have integrated a two-step kind of system. So if it is required two signatures, you can actually set it up that you would authorize it, and then you would send an email to Carol she would also have to sign off on it. So that gives you your your two signatories authorizing a transfer. That's what we've seen a lot of businesses kind of go towards, not just non-for-profits, but businesses in general. So that gives you your segregation of duties and all that stuff.
Yeah, it's certainly a challenge to try to.
Because I mean, certainly, Jamie, I know as a new not-for-profit, we don't want to invest in checks. We don't want to invest in big things. We want to be able to do e-transfer, both sending and receiving. But we had to walk through with Samantha and the rest of her team. How do we do this right? How do we all collectively sign off on things? Because it makes it so much easier for our, just to be able to submit receipts and then get an e-transfer instead of having to worry about somebody's checking and all that kind of stuff, because we're not that big yet.
I love that you threw in yet.
We're yet.
You will be.
we're going to be there. We're going to take on the world. Who knows?
Some people still are okay with invoices and checks, but a lot of people now are looking for, that quick way of doing it, right?
Yeah.
And I guess the banks are moving forward. Like, yeah, you just got to get the technology straightened out. With an older board, sometimes that can be a bit of a challenge too. But I guess with time, things will move that way, right? It's
Yeah, it has to. It has to, right?
Well, that's why, like, one of the things that I have, now it won't matter because the account's separated, but I don't have automatic deposit for e-transfer because I want to be able to track and dictate where it goes so it doesn't end up in Carol's personal account and then get moved over to the nonprofit account or to the business account. Like, I need to be able to see that trail of coming in just to that one account versus being moved. Whereas I know some people have automatic deposit. I could send something to Samantha and I don't know if it's going to Treehouse or the credit union or Samantha herself, like, to me, that was a way to measure it, the way to restrict it a little bit.
I have a company Visa, but I mean, the limit is very small on it for some things that you have to put on it. So our accountant has said the reoccurring bills, your telephone bill, your internet bill, that never changes. That's totally fine to go on a Visa because you're going to pay for it anyway. And it's consistently every month it's X amount of money, the next month it's X amount of money, the next month X amount of money. Like, it's easy to kind of justify, but I don't even like doing that really, right?
Mm-hmm.
But it's just a way of trying to figure out. And I guess like anything else, it'll change. The nonprofit world will have to catch up over time, and in the accounting world will have to catch up on how the nonprofit world handles it too. So it's
Exactly.
shift. Because we've even struggled with review engagements versus audits versus notice to readers. And now it's changing now, and we need review engagements now, which is a higher level up. It's just the whole thing seems to be kind of.
Everything is just become more extreme.
Right.
Bless you.
And before, engagement was only half of what it used to be, from what and from previously doing review engagements to doing one coming up now. The questions that I'm answering for review engagement were never ever that way. So the whole fun. I mean, it's all for the good because nobody wants to be doing anything slack. It's just more time, more money, more energy. It's just try to move things forward, right?
Yeah. And you've got an organization, Jamie, that has an executive director. So for all those organizations that don't have staff or very limited staff, some organizations it is just the executive director. There is no other staff. That's a lot of onus on those either volunteer boards or
never ever get audited statements. Just for the simple fact that A, they're too expensive, and B, their volunteers don't know the difference or don't want to spend the money to make those happen, or you can't find an auditor to make it happen. There's kind of a double-ended sword, right? Like, it's 'Cause I know a couple of the charities I'm involved with, we don't do audited financial statements. I mean, we prepare an internal statement, and we have a lot of protocols in place because of the background that I'm in, as you are in, Carol. Like, I know, okay, this has to happen here, but we don't actually get it outside reviewed because you can't afford it. So basically,
It's
Well, and I think
expensive.
that would go back to like your membership and stuff. Like we have determined through our lawyer, our members are our board. We don't have members, so we're only accountable to one another
Mhm.
at this point.
Yeah.
Mhm.
At some point, we may become different. You know, but we're not like a hockey association that we're accountable to the parents putting money in. We're not putting money in. We're going and seeking money. So we
That's
don't.
right. And but the moment you get a grant from a government, you become accountable to government
Right.
or
And
to
we're
some
okay to do.
wealthy former Pasadena resident left you $1 million in the will to promote
Build our museum
Pasadena
finally.
heritage.
but even the registered charities that I'm involved with don't do audited financial statements. We prepare our own internally and we send in their CRA, and
Mhm.
they're fine with it because the amount of money we're dealing with is not hundreds of thousands of dollars, right? It's tens of thousands of dollars.
And
Still-
and business organizations are the same. CRA does not require audited financial statements for a business.
Yeah.
It's banks or
Yeah.
money from government. All these will require a
Yeah.
level of assurance
Yeah.
from a professional.
It's interesting.
This has been awesome, Lynn. Most everyone's dropping off because I know we're out of time. But I do want to thank you for taking the time to take us through that. And all kidding aside, Jamie and I were talking about dry project management, and I know I tease my mother as an accountant that this can be dry, but it's so important. And I think for this sector, you know, given the fact that many of us are just fumbling, we're volunteering because they're passion projects, and we're involved in, you know, these not-for-profit organizations, and so to have someone like yourself give us the guidance is fantastic. So I'm going to say, for the purpose of the recording, for those that are watching and those that are left, we're going to take a break over the summer for Community Connection. So I'll probably be back in October. Because believe it or not, right now my September is going crazy already. So I'll probably pick a date in October for our next session. So as always, if anyone has any suggestions of any topics or guests that you'd like to see, please let me know. Other than that, I'm going to wish you all a wonderful afternoon. Thank you once again, Lynn. Been very, very valuable and really appreciate it. And you see, you kicked me off on that workshop that I attended, and you got me thinking about financial statements. So.
And Carol, before you go, I found your poll link in the chat. So when you put your poll up they went to the chat. So,
yeah, I know. And so Slido, it says there's an integration with Slido into the presentation, but if I were to do the presentation and share just the presentation in my slide, then it would become active, like
Gotcha.
when I click on the slide. But when I share through the OneDrive, it doesn't. So I got to play with this a bit more.
So I can click on the chat and it takes me there.
Yeah.
Yeah, which I didn't see when it was originally done. I didn't see the chat flash up at me, but yeah.
There you go. Awesome. All right. Well, thank you, everyone. As I say, the recording will be shared on my social media, and I will send out an email on an evaluation because I know we had get some people drop off. But if you can complete that, it just helps me plan future events. And thank you once again, everyone. Have a fantastic day.
All right.
Bye-bye, everybody.
Thanks.